I'm introducing the other. So it's my pleasure to introduce the other members of this panel who will come up onto stage. We have a rich set of people who have lots of expertise in FinTech and blockchain. First, I'd like to welcome Simon Taylor, who is the co-founder and blockchain lead of 11FS, a financial consultancy. He is also an advisor on matters such as blockchain to the UK government and the Bank of England, and he has worked in the past with the leading bank Barclays. He co-hosts one of the leading business podcasts called FinTech Investor. Next, I'd like to also welcome to the stage Brett King, who is also an advisor to government, in this case the American administration, on FinTech policy. Brett is a renowned author and futurist and business expert in his own right, and he is the co-founder and CEO of Movin, a mobile wealth management and banking application. In a moment, you'll be hearing from both of them, their views. And then there are two other distinguished members of the panel to invite. I'd like to welcome to the stage Professor Yu-Chin Chung, who is the chairman of the FinTech Center and professor at Sogang University here in Seoul. He has an MBA from Wharton School in the University of Pennsylvania. And then I'd also like to welcome onto the stage Tae-bong Kim, who is the vice president of the Korean FinTech Industry Association, and that is the largest FinTech network in South Korea, with membership from over 200 companies. And Tae-bong Kim is also the representative of South Korea's largest security group, and the author of a number of books too, including Power Hacking Technique. So each of the three of us in the beginning. So let's welcome to the stage all these panelists. Let's give them a welcome. And by the way, to make it even better, we're going to bring back expert Valery Vavilov, who is going to answer some questions as well. So I'm going to start by sharing some of my own thoughts about the important questions we have to face. Some of us are here because we're interested in which technologies are cool. Some of us are motivated to find out enhancements to technologies of Bitcoin and blockchain. And that's a good set of questions. Some of us are here because we want to make money. Some of us want to know the best investment tips for finding the good cryptocurrency or ICO. And that's an important set of questions too, and maybe you can get some hints and tips from the later speakers. But I have a different motivation for addressing the question of the future of currencies, FinTech and blockchain. And it's the same as some of you who were here yesterday might have heard me talking about. I spent 20 minutes yesterday setting out my thoughts on the future of society, and I'm going to spend 2 minutes here just summarizing. I don't think we're going to continue with business as usual. I don't think the future is going to be basically the same as the past. I think that's a low probability because there are so many disruptions happening on account of the technologies of the fourth industrial revolution. These are more transformational than anything we've experienced so far in history. If we are foolish, if we are naive, or if we are unlucky, these technologies may cause a collapse in the well-being of society. And I'll look more at that in a moment. If we are smart, if we are strong and wise and agile, we can bring about instead a much better state of society than anything we've seen before, using technologies such as the blockchain mentioned by the previous speaker to eliminate lots of corruption, ensure fairness and transparency. I think that's the most likely scenario, but I think also we have to work hard to ensure that it happens. And in order to ensure that technology works for everybody, it comes down to one particular set of technologies, which are social technologies. So I had this picture yesterday as well. The success of nanotech, biotech, infotech, and cognitech depends most of all on how well we are doing with the technologies of finance, accounting, security, markets, and so forth, what I've called here social tech. And we're going to look in the next session at aspects of the technologies of finance and ledgers. Are we sure that we are collectively applying our finance in the ways that make best sense for society? And are we sharing the information effectively? So let's talk about collapse. We have a history in the world of financial collapses. And I'll just look a little bit at a few of them from history. The first financial collapse that affected a lot of different countries was in 1857. And the cause of that particular collapse was a whole bunch of excitement about a new technology of the time. It wasn't cryptocurrencies in these days, it was railways. And everybody was convinced that there was a lot of money to be made by investing in railway stock. And that was good for a while, and lots of insurance companies and pension schemes put lots of monies into railway stocks, convinced that it was never going to go wrong, until the share price of railways stopped. People realized that many railways were just so-called paper railways. There was nothing real behind them. Insurance companies went out of businesses, banks went out of businesses on both sides of the Atlantic, lots of bankruptcies, lots of personal heartaches, even quite a few suicides. There have been other financial crashes as well. The crash of 1929 came just after a very famous economist, Irving Fisher, told everybody that the share price was going to be permanently high from then on. More recently, there was the global financial crunch of 2008, which I'll say more about in a moment. But there is a historical trend here. The historical trend is that our financial systems become more connected and more innovative. And for a while, it delivers more prosperity and more stability, but then eventually it seems that there's a greater collapse, which might be more disastrous than before. And if that's the case, there might before long be another financial crisis, which some economists are predicting. I'm not saying it will be in any particular year, but I'm very interested in knowing, is this likely or not? And let's remember what happened with the financial crisis of 2008. Most economists did not foresee that happening. And in fact, the Queen of England, Queen Elizabeth II, who was invited to the London School of Economics after the financial crash, she was invited to open a new building. Normally, as the Queen of England, she doesn't get involved in politics, but this time she had to ask the economists, why did none of you see this coming? Why were all of you so optimistic? And the economists spent some time writing her a letter, and they said there was too much of a feel-good factor. Because of this optimism, we didn't look closely enough at the underlying problems of the world economy. There was a psychology of denial that gripped the whole financial world. And too many of us were too impressed by people who seemed to be very clever financial wizards that convinced us all that the risk was being managed in a better way. And what happened next has been told in many histories and autobiographies. We came very close to a terrible crash of the world economy. And as it was very bad. So my first question that motivates my study of this, is another global financial crash imminent? And if I look at what economists say, I don't find a great deal of agreement about questions of macro financial policy. I'm still a bit worried that we are lucky sometimes and we might have our luck run out. There's a lot of disagreement. But then maybe we can learn from what people have been saying about better systems of financial regulation, not heavier, but smarter. And can these new currencies, the cryptocurrency systems, help us in some ways? If we have more blockchain regulations, which to an extent are automatic and transparent, could that help bring stability? And there's a related question, is if we think there is a financial problems ahead, should we be putting our assets into cryptocurrencies? I noticed that in Zimbabwe, where there's a terrible financial mess, lots of people there are investing, not in gold, but in Bitcoin. Should we all be doing that to hedge our bets for the future? I'm influenced by the Financial Times writer John Kay, an eminent economist, who has some critical words about the finance industry. He points out that many people in the banking industry, they're great people, many of them, but they seem to imagine, whether they're on Wall Street or in the City of London, that they are like the masters of the universe. Whereas I believe all industries should exist to serve society rather than just to make money for themselves. The shocking thing is that in the City of London, by some accounts, 97% of the bank's financial transactions are with each other. So it's a very inward-looking industry. Only 3% of the lending from banks are to firms and individuals in the so-called real economy involved in the production of goods and services. In other parts of the world, it's different percentages, but usually it's only 10% of banking activity is focused on the real world. And that may be good if you're a banker. There may be lots of money to be made, but I'm influenced by something that's happened in the world of AI. Recently, the Conference on Beneficial AI said, you know, the purpose of AI shouldn't be to create undirected intelligence, but beneficial intelligence. I think in the same way, the finance industry should exist, not for finance for its own sake, but finance for the benefit of society. And the question is, how are we going to do it? The question is, can blockchain enable significant positive changes in society? And we already had a very interesting discussion with the keynote speaker on this, about how cryptocurrencies might improve fact-checking, vote counting, identities. Other people think that cryptocurrencies will enable greater financial and social inclusion. I think that's right, and we should be exploring it in the panel that precedes. But first, there are challenges in the world of cryptocurrencies. There are issues with the scalability of the systems. Currently, if you look at all the energy consumed by blockchain systems around the world, it uses 50 times as much energy as the Visa transaction processing system. It's very energy intensive. And of course, Visa handles many, many more transactions. So an individual blockchain transaction is about 1,000 times as energy intensive as an individual Visa transaction. So some critics think that the system cannot scale up without running into more exponential problems, more energy being used, worse contribution to greenhouse gases and global warming. And people are talking in the cryptocurrency community about solving these problems. That's why there's issues like Bitcoin Cash or other lighter chain versions. Are they going to succeed or not? That's not clear to me yet. And indeed, there are lots of arguments and forks within the Bitcoin and blockchain community. Is that a sign of growing disagreement and problems? Or other people will say, no, it's nothing to worry about. It's a sign of a healthy, dynamic community that these arguments and discussions are taking place. And of course, we're not quite sure how it's going to work out, but that's business as usual. I think that's my own view on this, but I'll be very interested to hear the views of the other panel members. There are other issues that need to be addressed in the world of cryptocurrencies. A lot of people say we are still in the Wild West timescale. There are lots of discussions that innocent people who are trying to make money will be scammed or burned. They will lose lots of money in the process. So we have to decide what kind of regulation and governance is appropriate for this. And of course, governments are thinking about this a lot. Some governments are actually banning, as you know, here in Korea and in China, banning or thinking of banning some cryptocurrency services, such as ICOs. I'll be interested to know from the panel, do they think that's the right response, or is there a better response to these challenges? And one criticism of these cryptocurrencies is they enable money laundering and other criminal activities. Should we be more vigilant against that? Are there ways to stop that kind of issue? There may be other dangers lurking in the world of cryptocurrencies. There might be issues with the fact that smart contracts, which is one of the features that can happen on the blockchain, especially in Ethereum, they are pointed to as good. They take away human intervention, but maybe it's bad that there's no human intervention. We might end up with self-executing code, which we then regret. And we think, oh, this was a bad idea. But if the Ethereum is actually an uncensorable global computer, maybe we will regret it. Are people thinking hard enough about that? Some people are. What are the conclusions? It's not yet clear. And then on the security angle, maybe all the crypto in cryptocurrency might become vulnerable to new technological advances known as quantum computing. The key mechanisms, that's the cryptographic key mechanisms which are used in cryptocurrencies, might suddenly fail once people have access to future quantum computing. Is that something we should worry about? Maybe all the money that people thought they had securely stored away gets stolen by some company or country who has quantum computing. Should we be encouraging governments to get involved? We heard from the previous speaker, he was very much urging governments to take advantage of blockchain. Take advantage of blockchain, yes. But what about alternatives to Bitcoin? Bitcoin was created as money not controlled by governments, but some governments are thinking about creating their own cryptocurrencies, sometimes called a Fed coin, in order to get some of the advantages without, as they see it, the disadvantages. Maybe it will stabilize the price. And perhaps the country that is the best at blockchain will suddenly become a leader in the world in more aspects. It's similar to what the Russian president, Vladimir Putin, has said. He said that the country that leads in artificial intelligence will become the leader of the world. That may be true. Perhaps also the country that takes best advantage of blockchain will see a big progress in the well-being of society, and that maybe have implications for geopolitics. Maybe it will be the same as the so-called innovator's dilemma, in which many great companies fail because they can't handle new technologies. Perhaps some great countries will fail because they are not able to understand the possibilities of blockchain. I've just a couple more questions that I think is worth exploring. They're more about the future directions, and I think some of the speakers will look at them. Some of these currencies can be used to replace cash. Perhaps in the not too distant future, we won't carry cash anymore, any notes or coins. Just as we may leave our passports behind, we may not have any cash in our pockets. Is that a good thing or not? It may be efficient, but maybe we will lose our privacy when sometimes people want to buy things without a record. So, is that a desirable direction or not? And there's another question about the future, which is, do we want banks to lose power to the new companies that are leading with payment systems? Companies such as Apple and Samsung and Alibaba. They're the ones who are pioneering new payment systems. And perhaps banks will lose their significance as a result. Is that something we should welcome? Maybe we don't like banks. But maybe these other companies, Apple, Samsung, Alibaba, and so on, maybe they're already becoming too powerful. Maybe it will be dangerous if they have even more power in society. And then there are questions about how many currencies should we have. In some parts of the world, countries are trying to unify their currencies. They think it's a problem when there are too many separate currencies. So the Eurozone have removed many historical currencies. But with more cryptocurrencies, we won't have fewer currencies, we might have more currencies. There might be thousands, in fact there are thousands of cryptocurrencies. I guess most of them will fail, but what should be desirable in the future? Is it desirable that we just have a few currencies, or is it desirable that there are many? And my last question is about the longer-term future. This isn't about lack of cash, this is about getting rid of money altogether. This conference is about the forthcoming singularity era, when there's more and more abundance and less scarcity. Maybe if there's no scarcity, there won't be a role for money. Is that a desirable future or not? Should we be looking ahead to it, trying to make it happen? Or is money actually very important and we should keep it for as long as possible? So, okay, I've raised lots of questions. I'm not expecting we're going to be able to answer all of them in the time that's ahead. But I do have one final comment, which is where are we going to find the answers to these questions? Do we just leave it to the technologists who come up with great, cool technology? Do we leave it to the entrepreneurs who come up with wonderful business ideas? Do we trust the financial innovators? My answer is no. I am a technologist and I am an entrepreneur, but I don't think these motivations are enough. I think because of the possible downsides as well as the upsides, we need to bring all perspectives together. We need to have a big democratic decision about the future possibilities of technology. And we need to do this quickly and seriously because cryptocurrencies and financial systems are evolving faster all the time. And if we do this right, then we can actively steer technology to create a comprehensively better future for everybody, avoiding the grave risks which might cause another collapse. Thank you very much.